Assalamualaikum warahmatullahi wabarakatuh and a very good morning, I bet to all panels. My name is Nur Shazwani binti Salim, your acting moderator for today's forum. Ladies and gentlemen, before I introduce our panel members today, allow me to peel first the title of our forum. So, the title of our forum today is the difference between Murabahah financing and conventional loan. Nowadays, the Islamic finance industry has expanded rapidly over the past decade, growing at 10 until 12% annually. In many majority Muslim countries, Islamic banking assets have been growing faster than conventional banking assets. There has also been a surge of interest in Islamic finance from non-Muslim countries such as the UK, Luxembourg, South Africa, and Hong Kong. So, we want to know what is the difference between Murabahah financing and conventional loan. Well, before we go any deeper into the topic of discussion, let's get acquainted with all four of our panels today. All of our panels are financial experts. Our first panel member is Puan Azatul Akmal binti Shamsuddin. Next, I introduce the second panel member, Puan Nur Zulkirah binti Zulkifli. Next, the third panel for today's forum is Puan Hidayah Alfi Nurul, and our last panel for today is Puan Nurul Izzah Akhtar. Ladies and gentlemen, what is exactly meant by Murabahah financing and conventional bank loan? To answer this question, allow me to ask the question to the first panel member. Puan Azatul, please provide an explanation of the concept of Murabahah financing and conventional bank loan. Please.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azatul Akmal binti Shamsuddin and my matric number is 282060. Thank you to moderator Miss Wani for the question. So without any further ado, we will proceed to the answering the question. So the definition of Murabahah is an Islamic contract sale between the bank and the customer for the sale of goods at a price which includes a profit margin agreed by the both parties. It is also known as a cost plus financing. In Murabahah transaction, it involves the purchase of goods by the bank as requested by the customer. Then the goods are sold to the customer with a markup price. And the repayment are usually on installment basis. While the definition of conventional loan is a contract where the bank lend money to the customer and make a profit from the interest charged on the principal amount, which means that the conventional loan is purely interest-based lending agreement. The repayment is also on an installment basis, but with plus the charging interest. After discussing about the definition of Murabahah and conventional loan, we will proceed and focusing to the next topic, which is concept of the Murabahah financing. So, the term Murabahah is commonly used in Shariah, that is used by Islamic banking and does not charge interest in the transaction. In Murabahah transaction, there is a clear agreement between the buyer and the lender with regard to the commodity that being purchased, as well as the charge that imply on the commodity. In this context, the charge is permissible because Islam permit making profit on the sale of product, either in instant or deferred payment. But Islam forbid the element of usury, which is riba, in the transaction. This has been clearly stated in Al-Quran, Surah Al-Baqarah, verse 275. In the verse, which means those who are consumed interest cannot stand on the day of resurrection, except as one stand who is being beaten by Satan into insanity. That is because they said trade is just like interest, but Allah has permitted trade and has forbidden interest. So, whoever have received a domination from his Lord and deceased may have what is past, and his affair rests with Allah. But whoever return to dealing in interest or usury, those are the companion of fire, and they will abide eternally there. So, To make it simple, the key difference of Murabahah financing and conventional loan are based on the contract structure, which the Murabahah is a sale contract in which both of the cost and profit charged on the commodity are known or stated by the bank to the customer, while the conventional loan is simply an interest-based lending agreement in which the loan is advanced and charged with interest, which this kind of instrument is strictly forbidden in Islamic financial system. So that's all from me for the definition and a concept of Murabahah financing. We will proceed to the next panel. Thank you.
Thank you, Puan Azatul, for the great explanation just now. Now, let me continue with our forum with the next question. So, I would like to ask Puan Zulkira for the second question. The question is, what is the payment used in Murabahah and bank loan transaction?
Assalamualaikum. Thank you for the question, moderator. Before that, I will introduce myself. My name is Nozukira binti Zulkifli. My matric number is 288890. For the question is different between a payment in Murabahah transaction and conventional bank loan. Alright, for the payment in Murabahah transaction, there are different opinions are expressed by the scholars. For instance, some scholars are allowed to add extra charge when agreed payment is late, deliberately delayed to be paid, while some scholars are opinion that even if such extra charge is added, it should be given out as a charity. Also, Murabahah transaction is permissible according to Sharia. However, for the conventional bank loan, have usury of charging of extra amount for late payment attached to the payment of loan commonly practiced by conventional bank. Next, payment in Murabahah transaction or financing is someone may contact a bank operating Murabahah in order for the bank shows readiness to buy such a product to the customer. Consequently, the bank sells the product to the customer, adding its own profit, which expectedly is to be paid on installment basis for the split of agreed numbers of months or years. While for the conventional bank loan are making payment of charging extra amount for the credit sale to the buyer, and the price of commodity is made of the time on making the payment. Consequently, it is forbidden in Sharia. As a result, the transaction of Murabahah could not be equated with riba. This because riba is to charge a predetermined amount as a return for using of money. An inference could be drawn that there is a fixed amount of money added to the actual amount of money used to purchase a particular product is fixed in Murabahah, because if a customer is delinquent in making the payment as agreed on, there is no increase in payment of interest. This is the major difference between Murabahah financing or transaction and conventional bank loan. That's all from me. Thank you.
Thank you, Puan Zulkira, for the explanation and sharing about the payment used in Murabahah and bank loan transaction. So the next question is, can we know the practice of Murabahah and interest in conventional bank? So I would like to invite Puan Alfin to share the knowledge about it. Please.
Thank you, moderator. Before I start answering the question, let me introduce myself first. My name is Hidayah Alfin Nurul with metric number 276261. So here I will answer the question of practice of Murabahah by Islamic bank and interest by conventional banks. With Murabahah, there is no interest linked. Rather, it is selling of a certain commodity with an associated profit. An Islamic bank may buy a product and then sell it to the customer for a profit. The aforementioned justification must adhere to the rules and customs of Islamic finance as described in the literature. The efficacy, performance, and future prospect of the Islamic banking system in the Muslim world must be demonstrated via the effective practice of Islamic bank. For instance, the implementation of the commodities Murabahah programs in various important Muslim nations is regarded in the literature as an innovative method of managing liquidity. Murabahah is viewed as a barrier by some conservative economics to the sustainability of profit and loss sharing as a fundamental component of the Islamic financial system. Murabahah transactions do not explicitly state profit profits or losses, yet there is flow of money between lenders and borrowers. However, the traditional interest rate on a loan does not change significantly. Rather, the main distinction is the nomenclature used by Islamic and conventional bank. There are differences between the Murabahah concept used by Islamic bank and interest charged by regular bank, particularly in this area. Under the procedure of Islamic and conventional banks, the structure of the good to be sold is different, but according literature, interbank benchmark rates are necessary for the Islamic financial system to function in the current day, while Western banks' loans are defined as interest added to their overdraft service. Islamic bank Murabahah practice may be viewed as a contractual sale of specific goods to make practice of Murabahah consistent with Shariah. Proponents of the Islamic financial system must be open-minded and engaged in the intellectual discussion. I think that's all from me. Thank you, moderator.
Thank you, Puan Alvin, for the concise explanation and sharing just now. So for the last question in our forum today, I would like to ask Puan Iza, what is the difference between Murabahah and conventional bank loan?
Thank you, moderator, for the question. Before we proceed, let me introduce myself. My name is Nurul Iza Akhtar binti Muhammad Tajuddin and my metric number is 288928. So, the key difference between Murabahah and conventional loan is the contract structure. Okay, Murabahah contract is known as cost plus financing, which is a common mode of financing used in the Islamic banks. Murabahah refers to a sale which seller discloses the cost of the underlying commodity and the profit charged in the form of markup. In Murabahah contract, the bank purchases the commodity as per the requisition of the client. Here, the bank is bound to disclose the cost of the underlying commodity and the profit charged on it. While the conventional loan is an interest-bearing loan offered by the conventional bank, which is a loan is advanced and the interest is charged upon. This is strictly forbidden in Islamic financial system. Secondly, in Murabahah, the price of the contract is fixed and cannot be changed at a later date, and the payment can be done on the spot or installment. Murabahah contract complies with the risk-sharing principle of Islamic financial system, whereas the conventional loan puts the whole risk on the debtor's shoulder. And the last one is Murabahah contract only valid for fresh new assets, and buyback agreement is prohibited, whereas a conventional loan can be taken for any purposes. Murabahah in modern structure may result in many Shariah issues, especially when it involves an agency arrangement and purchase undertaking. For example, the issue in the disclosure of cost price, where the seller is obligated to disclose the actual cost price or acquisition cost of the asset that intend to be sold to the customer on the basis of Murabahah. The acquisition cost may include direct expenses incurred to enable the acquisition of the asset by the seller and the delivery of the asset to the purchaser. These include actual direct expenses, which are established by customary business practice urf tijari. However, it may be difficult to determine direct expenses precisely and distinguish it from indirect expenses. Therefore, if the exact acquisition cost cannot be ascertained or is unknown, it is impossible to have Murabahah contract. In this case, the sale must be conducted on the basis of musawamah. So, that's all from me. Thank you.
Ladies and gentlemen, finally, we come to the end part of our forum today. So I would like to say thank you to all panels for the informative and interesting talk, and to audience for active participation. Hopefully, the forum today will be beneficial for everybody. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.